let's start off with Zambia, because we had S&P assign a B plus a credit rating to the country, and that now matching Fitch's rating that came earlier. Your view on Zambia right now from a macroeconomic perspective?
Well, you know, we've discussed this on a few occasions. You know, the outlook just for Zambia just remains looking good. You know, GDP growth, which was sitting in 5-6% area in recent years, expected to go up over 7%. The amount of investment that's going into the economy is quite big, you know, so we expect to see a sustained growth in mining production. This is different from what we saw back in 2006, where mining production was actually battling in 2006, 2007. But from 2008, 9 and 10, it started to pick up, and this is now as investments that have come into the system in recent years are now starting to bear fruit. But that investment cycle hasn't stopped yet. Right? So we expect to see continued investment going in. We expect mining production to continue growing, and you know, and this is likely to remain a key underpinning for the economy for many years ahead.
Of course, we've got the country holding the same credit rating as Nigeria and Angola right now. In your books, is it sitting on par with its peers? How is it stacking up against those two specifically?
Yeah, I mean, I think it is, you know, because it's a country which has got certain pluses and other negatives, you know. So as always with these ratings, some things are good, better than others, and some things are worse than others, you know. And in Zambia's case, you know, economic growth is pretty stable. It's increasing, but it doesn't shoot the lights out. Balance of payments looks pretty good, you know, and it is improving consistently, which is very healthy. And then the deficit also is pretty manageable. You know, this is, for example, where it is better than Nigeria, better government deficit. The problem, though, that they have is income levels. You know, still a relatively poor country, and that detracts somewhat. And then in the shorter term, you know, it doesn't necessarily fundamentally change the rating, but you have risk coming from, you know, things like the upcoming elections in the latter part of this year, concerns that S&P raised, for example, about increasing imports, you know, that this might put some strain on the balance of payments in the
So with these push and pull factors simultaneously at play, we've got the country planning to launch its first foreign bond soon. $500 million international bond is what we're possibly looking at. Anticipated uptake there, not only bearing in mind the domestic scenario, but the global context within which we're operating right now.
I think it would be reasonably well taken up. Zambia has been a country which has got a very long track record of investors going into the domestic interest rate market. If they now have the option to remove the currency uncertainty and go into dollar-denominated currency, I think they'd be quite happy to do that. I can't see at all that there would be a problem with demand for the bond. I think it will go down very well.